Let's bring in Bernstein Global Wealth Management's Seth Masters and Euro Pacific Capital's Peter Schiff. Seth, let's start with you. Fed or no Fed, you still have a rather bold prediction, Dow 20,000. Now, we put a chart together from some of your numbers, just looking at where stocks were value-wise in October 07 to 2013. And you've got stocks were at a 15 forward PE, and now they're at less than 14. You say the debt to equity was 63% of debt way back then. Now it's only 34% debt to equity. And you point out that the yields on stocks are, a few points higher than they were in 07. But the Dow was down 180 points today. It was down 200 yesterday. Are you wrong?
Well, I think days like this are good for investors because of the frenetic feeling in the market. Markets are emotional. They're about human expression of insecurity often, and today's a great example. But the underlying phenomenon that we've seen has been triggered ironically by a Fed statement that the economy is on track to do better than expected, that the risk of a downside event is less, which means, if anything, that our forecast that Dow will hit 20,000 by the end of the decade, I think, is even more likely.
Okay. And Peter Schiff, welcome back. It's good to see you again. And you, of course, have been, hanging crepe for quite a few years now. What do you think of the markets today? And what about Dow 20,000 by, when did you say? By the end of
the decade.
Peter?
Well, the question is, where's gold going to be if that happens? But in the short run, I think the market is going to keep on falling until the Fed acknowledges that it's got the economy wrong. Because this whole recovery that the Fed believes it created with the QE is evaporating before it even dials it back. I think that the next thing the Fed's going to do is add to the QE. They're not going to take away the QE. They're going to put more crack in the pipe. The market just hasn't figured that out, because if the Fed takes away the stimulus, it's basing the whole recovery on the housing market. The housing market is about to implode again and go for new lows because of rising mortgage rates and speculative buyers turning into sellers.
Okay, Seth, your bullish forecast for stocks, because you think the Fed continues easing, or is it because you think the economy really is healing?
Very much because the economy is healing. What we're seeing is a very modest recovery that's lasted already as long as most recoveries and has the potential to last a lot longer because it's been so modest.